Welcome, everyone. Today's discussion is going to be an in-depth and insightful discussion on mitigating employee conflicts of interest. We were joined by three fantastic panelists who are experts in the field, and I would like to invite them to provide a quick introduction of themselves as well. Andy, may I start with you?
Sure, of course. My name is Andy. I'm based here in Hong Kong. I've been covered regulatory compliance, FCC, data privacy, and also anti-bribery, anti-corruption for the entire region in Asia Pacific. I have been started my career in the banking sector, moving on into the payments and startup world, and now sitting with Worldline here in Hong Kong. We'll do a few things, but mainly for the payment infrastructures and also on the connectivity between merchants.
Thank you, Andy. Emily?
Thanks, Sarah. Thank you, Andy. Great to see you all here. I'm Emily Wright of Wright Consulting and Coaching, and after a 20-year career in-house in various roles in the industry, I now partner with financial institutions and individuals to help solve the thorny issues around conduct risk, ethical cultures, and employee surveillance.
Thanks, and I'm Kellyanne. I'm the Asia Pacific Director for my compliance office. I love helping firms to improve their existing processes and automate compliance activities. I'm a Kiwi based in Singapore, and my favorite clients are ones who are open to change some of their outdated policies to help them simplify compliance. And I'm looking forward to hear how we can help reduce the challenges we have with mitigating employee COI today.
Thank you. Now, on registration, everyone here today was asked a question: what is your greatest challenge in managing employee conflicts of interest? Gifts, entertainment, and hospitality, GEH, emerged as the leading concern, with over 2/3 of respondents identifying it as a key issue. The complexity of determining appropriate limits, disclosure requirements, and potential conflicts of interest make this area a persistent challenge in compliance programs. Also, we have material non-public information, MNPI, and that's approximately half of respondents flag this as a significant concern. 48.6% also for personal trading, and over 40% identified communications monitoring as a key area as well. And that reflects the complexity of surveillance multiple communication channels, while also respecting privacy and identifying potential misconduct. Now, employee conflicts of interest is a topic that continues to test firms globally who can suffer significant reputational damage, erosion of customer and investor confidence, and resulting financial losses and penalties. But at the same time, regulators remain vigilant, aiming to uphold the integrity of their respective markets. Now, we've seen a slew of enforcement actions this year across the United States, the UK, Australia, and in where we are throughout APAC as well. And these enforcement actions just underscore how seriously regulators are taking conflicts of interest in financial services. For example, regulators such as Australia's ASIC regard conflicts as actual when they're already occurred, apparent when they appear to exist, or potential when they could arise in future. Now, conflict of interest are also more about understanding where vulnerabilities exist before they turn into regulatory breaches. It's also important to recognize that risk can be highly connected across areas such as personal trading, access to inside information, employee communications, and even corporate hospitality. Now, let's get right into it without further ado with one of the most closely monitored areas, that is personal account dealing. Now, when employees trade securities, for example, in their personal accounts, they're navigating a minefield of potential conflicts of interest, such as access to material non-public information, conflicts of interest of client transactions, and so on. So let me turn to you first, Andy. Your specialty includes compliance framework modeling and execution, operational execution. So what are some of the common gaps you observed in firms' personal account dealing? particularly when it comes to dealing with cross-border employees?
Because I think you've given a lot of good start to it. And fundamentally, I would say from a FI perspective, the stance is about responsibility. So that is an increasing trend by the authorities moving into this space. And the gaps that we have seen, I think, is that for cross-border employees, whereby they would have offshore accounts which may not be reported, because if you are based in Hong Kong, the likelihood is that you will be able to do a lot of reporting from your Hong Kong accounts. But if you have accounts that is, say, based in the UK, in Singapore, or elsewhere in the US, those may not be easily that detected, and that actually increase the vulnerability of delayed reporting. And we also have seen trends of individuals using derivatives to engage into the markets. And this is also a capability that we will need to acknowledge and also to fine tune in our safeguards. And within the organization, as we can see, is that because of the residual, the existing China walls, it's not a bad thing, but that will lead to a slowdown in terms of the exchange of information. But nonetheless, we can actually overcome this through digitalization with systems in place. But this will be dependent on each individual organization. So the parameter, I would say, comes back to a lot on the emphasis on self-disclosures. We will need to have increased enforcements by the organization. And I will share with you an example. I mean, in the past, when we have a situation of an employee with a UK spouse, they had accounts whereby they had access to accounts which traded in Asian markets. Now, obviously, the firm will not be able to detect and understand those. It was through whistleblowing reports whereby there was, should I say, focus on the individual employees' affluence expenditure, say driving a new Ferrari every single year. Those things were reported by other individuals. And subsequently, due to those investigations and checks, we actually discovered that there was offshore trading accounts being utilized. So those things, I think, is the common gaps that we will still see materializing in this current setup. And it's back the floor back to you.
Thank you, Andy. Now, Emily, Andy has talked about common gaps in some of these personal training programs. But from what you've seen, what are some of the process or policy gaps that you've seen that led to missed or delayed detection?
Yeah, of course. Thank you, Sarah. And I think it's worth understanding we've got very big and very small organizations all represented and covered by regulation. And so when we think about the big institutions, a lot of them will have control rooms, a lot more policy and procedure around this than perhaps smaller organizations. Those smaller organizations could have gaps just because they haven't gone heavy on documentation and don't have dedicated teams. But for all firms, this is a tricky area because you're trying to ensure that you've got coverage where you only know what to cover if an employee has made an accurate declaration. And then they're responsible for providing part of the data set for you even to be able to do that monitoring. So we've got the two big control barriers here are undisclosed accounts and delays in disclosure. And I'm sure Kellyanne's going to talk about the importance of that data and ideally getting it electronically to be able to do a good job. But we do know when it comes to just the straightforward attestations that everyone here will have in their control library as the basis for knowing whether there's a personal account, it's not the most robust control. It depends on the culture of the organization and the individual. However, we have seen enforcement cases, particularly in the last 5 years, where individuals have falsely attested with respect to dealing accounts. So that's a real gap. What do we do in that space? Well, ideally what we do is go looking for potentially undisclosed activities. And you would use your eCommunications surveillance program for that. Looking to detect references perhaps to accounts or trading. Maybe even your DLP team can detect inbound accounts that are coming in to notify somebody where there's trading, and you've got cross-referencing then for what's being disclosed. Now, the challenge with that and with any control that relies on two siloed teams potentially working together, if you've got control room and surveillance, maybe the DLP team involved, has its challenges, but the more you can join up those steps, the more robust this control space is to know that the disclosures are complete and accurate. Another really common gap that we see across all sizes of business is that piece, I think actually Andy referenced it, where you've got family members and accounts in their names. So the policy will often reference the affiliated or the connected person's accounts. You'll quite often, we should say we quite often get the right disclosures from employees. You'll get a disclosure that there's an account. And then, although the policy says it's captured, the implementation of the process means that those accounts aren't then subject to monitoring. And that's a really common gap that I think everybody can easily go back and check. Are you applying the controls to all of the disclosed accounts? Many firms will also have a pre-trade clearance process. Now, this is obviously to make sure that if somebody in the organization knows you don't have access to MNPI, you're not trading with insider information. This is only a control if it is designed really well. Unfortunately, it's fraught with gaps. So there's 4 big ones, and if we just quickly canter through them, everyone in the audience will have examples in mind. But those employee trades often happen before they get official responses or verification. So somebody will submit it, there's an urgency on the trade going in, these things are always time sensitive, and then they'll go straight to their manager, get verbal approval, and then act on it. And how does your policy deal with that? Is verbal acceptable? Is there punishment for that? What are the consequences? Is it really part of the process? The next big control gap here is that approval process often doesn't include real-time checking of the restricted lists. There can be a few reasons for that, but if the person that's delegated to approve hasn't got access to those lists, that's a problem. And if you're creating a 2-step approval process, then you come back to problem 1 that we just talked about, which is that you make the process too long. There's then 2 smaller related ones that are very common. The next one is that an approval is provided. The trade can't happen within the time frame because the approval expires, usually within 24 hours, and the process hasn't built in that somebody can extend that or reapprove. The next one is out-of-hours trading, and this is where we quite often see that there's this unofficial exemption on out-of-hours trading, or perhaps those ones that have been early cleared and then the trade happens later. Employees expect to just go ahead and do it, and they really can't and shouldn't. So it's making sure that that policy really speaks to the practices that people follow. And that's where I would say the big 4 are.
Thank you, Emily. Those are really crucial points. Now, turning to you, Kellyanne, how are firms using technology to reduce the manual effort that's involved in monitoring these personal trading activities and potentially identifying red flags while at the same time improving accuracy?
Yeah, it's a really great point, and we saw some interesting points just mentioned. I am a really big believer in using technology for this, obviously, as it's MCO's like core product that we've been doing for many years. And I think in Asia Pacific, the utilization of automated systems for managing personal account dealing is far less than it is in places like the United States. And we need to move away from the manual processes. So Andy mentioned, for example, self-disclosure of accounts. And I think automated solutions make it far more easy to declare both your self accounts as well as spousal or children accounts if they come under your policy. And on top of that, as well as what we've already mentioned, utilizing automated brokerage feeds to obtain that information, including for the spousal and children accounts where they fall within your policy. Automated attestation of these is really important as well. And technology solutions can really get you there these days. Okay, I know a number of firms that are utilizing rules in their policy that say, if this trade is in a self account, then do X, Y, and Z. If this trade is in a spousal account, then A, B, C. And so it is really important that those accounts are declared in the system. And I'd like to make another point that these policies generally are global in nature. If you're based in Singapore, but you've got a trading account in the UK, that still falls within the policy. It doesn't get skipped. That account must be declared because there could still be trading activity. And as firms start to allow more global trading in different markets, this is important. In the United States, next year, the majority of the exchanges are looking to introduce 24-hour trading platforms to align with crypto and other areas. And so it is going to become even more important that the pre-trade approvals that Emily just mentioned are automated as much as possible so that the employees are not, having to walk over to a desk or send an email that isn't going to get immediate approval. As much as possible, automating the those pre-clearance rules, which might mean ensuring that all of your restricted, watch, gray, white lists are in the system, adding portfolio trades or portfolio orders into the system to identify front running and tailgating, and then also giving some ownership to your front office equities teams or fixed income teams to manage their own restricted lists of restrictions that perhaps are on their radar, but they've not placed an order for yet. If they've got some ownership over that inside the system, then you're not having to necessarily use manual approvals for that. It might be an automatic denial or at least go through a workflow process. The last thing I'd mention around things like the pre-trade approval happening after employee trade, the majority of our customers are looking for that and are trying to detect that. The biggest challenge we have is some brokerages will include a timestamp, and then other brokerages don't actually include a timestamp in the trades that we receive. And so we try as much as possible to get as detailed information of when a trade occurred. And in some cases, unfortunately, it's like they traded that day, and perhaps that's okay. So the rules need to cater for that.
Thank you, Kellyanne. And we'll sure be touch on more about this significant role played by RegTag and hear more insights from you later in the session. Now, thank you, panelists, on sharing their insights on personal account dealing. And with concerns surrounding personal account dealing, often stemming from employees' access to sensitive information, managing material non-public information, MNPI, becomes the critical foundation for everything that is preventing insider trading and maintaining market integrity. So let's dive into that. Emily, from what you've seen, what challenges do compliance teams face today when it comes to controlling access to MNPI and ensuring proper documentation?
Thanks, Sarah. Yes, it is a big question. The very first challenge, and it sounds glib, but we really do have to flag it, is making sure that everybody knows what MNPI is. They know when information is going to become material, and they understand what is non-public. So in the UK and the US, we have seen cases where the regulators have called out that these things weren't adequately embedded into the knowledge base and culture of the organization, so it wasn't being followed as the norm. I know that everyone on here will have in some form or another a suite of e-training that's mandatory, that's annual, that's got attestations and tests attached to it that will cover what is MNPI and what do I do with it. I'm pretty skeptical that this is really a key control. It can be a very weak control, and what we've seen in recent years is that it is overused as a baseline control. So there's an element of fatigue in employees. It does not mean it should not be used. It is a fantastic control to get the baseline out there, but I would be treating it as sufficient, not adequate, and that there are really more things that need to happen to speak to that regulatory concern that this is embedded as part of the culture and that people really will act on it and that it's top of mind. And that could be things like mentioning it in meetings when you've got examples of it internally, teams that are handling MNPI being reminded of it. Another really frequent and consistent discussion that comes up all the time is who is actually in scope for the MNPI controls. So who could be detected for insider trading? Who should we be looking at? And this comes up a lot because there's budgetary pressure, there's pressure around resources, and covering everyone, people where there's no real risk, is just expensive, creates a lot of false positives. However, and this is what we see far more often, eliminating large swathes of people on the basis of, for example, they're in a support function, which is what the HR system says, does leave you with risks that you've missed risk carriers. So I would be looking at making sure that there's been a genuine risk lens rather than just a step-by-step process that hasn't really considered the risks when you apply these. There is an element sometimes of a failure to report, so known risks. This is one of those awful cringeworthy moments when you're sitting in the seat and whether it's audit or a regulator, somebody comes in and finds something that you knew and didn't escalate. So again, how can that happen? We've got an element of culture here. So is there a culture where this kind of detection, reporting, and escalation isn't happening? It's not supported either because of fear of somebody being wrong, not psychologically safe. Maybe the people who are detecting it are junior and they're finding it in more senior actors. So all of those things would be controls to look at. But also those small process failures. Is the process for escalation clear at every point? Can people find it? Do they know what to do? And are you sure that those monitoring teams who are detecting these risks aren't overwhelmed and are able to actually do what they need to do? But probably the most frequent discussion around challenge in this space is keeping the information barrier or the ethical wall, and I think some still even call it the Chinese wall, in place and effective. Now, what are these controls? These are the suite of controls where you've got blocks, restrictions, you've got recording, chaperones on the communications between people with MNPI and others. This suite of controls has had just considerable strain since COVID. So what we saw in 2020 heralded in not only increasing ways of people communicating, that channel proliferation that I know we'll come to, but also it introduced remote working. And the combination of these two has had just a significant impact on the risks necessary to control the flow of MNPI. And that's where a lot of organizations are still doing work to enhance.
Thank you so much, Emily. Now, I want to delve deeper into market sounding and how to handle properly MNPI. So I like to turn to you, Andy. So is there anything that you'd like to share with us regarding regulators such as the SFC in Hong Kong? For example, from my understanding, they have introduced stricter market sounding guidelines this year. So from what you've seen, how are firms adapting and responding in the process?
I think it's a no-brainer because with all the AI wave, regulators are coming up expecting much more real-time kind of expectations in terms of the monitoring, in terms of the framework that we have in place. Because what Emily mentioned earlier in terms of what's to be expected, I think has a baseline. The firms are still relying in creating awareness, having training in place, but that does not control the activities that we have seen. So what is needed is really about having real-time monitoring, having a focus on the logs, the transactions that have gone out, having formalizing in terms of the chaperone process, the documentation for each and every step itself. Because the framework that we have in place today controls what is within our FI environment. But outside of that is a part that we probably will need to devote a little bit more attention. And these are areas that we are eventually going to head towards because, yes, on one part, SFC is expecting that, but we need to be smarter and we need to be smarter in enforcing the policies that with the framework that we have.
Thank you so much. Now, Emily, the communication of MNPI and sensitive information can happen over a broad range of communications channels now. We're in the age of information and AI. What's the biggest risk that you've seen with the proliferation of personal messaging apps such as WeChat and WhatsApp in the mix today?
Of course, yes, Sarah. And I feel like we could probably talk for a whole hour on just this. And I think Kelly and Anne and I might have done so before in the past. This is a big one. So as we mentioned earlier, the key control for MNPI leaks is keeping those information barriers and ethical walls in place. And so just like working from home, this increase in the number of channels, which as you said, Sarah, they are personal, they're direct, they're between the actors, they're between anybody and you've got personal devices or potentially home phones with remote working, all involved in the mix. So we're still grappling with this 5 years on. It's a real challenge. There is not one silver bullet here, but we can't downplay the scale of the problem. There is a real problem. And we know that because employees have been extensively using these unauthorized channels for a number of years. And it's been proven as we've had the US regulators go in and look at what we've essentially started calling the WhatsApp scandal, but it's by no means limited to WhatsApp. And those enforcements, although not focused on channel proliferation as such, or even conflict of interest risk, they've really ended up being fines around record keeping. They have demonstrated to us just how expansive the behavior is for individuals to be doing business communications that needs to be recorded on channels all over the place. New channels we've never heard of, devices we're not covering. And that is the problem. So there are just so many leak points and it's a moving target. There's new channels all the time. Firms can't realistically cover all of the channels. Surveillance programs, however, although they do need a defined and stable list and it takes time and money to get things onto the list, I have seen the industry in some cases double or even triple the number of channels that are now under coverage from about 2021 to 2022 onwards. So there has been a huge investment. Having surveillance coverage on approved channels, though, does not speak to the problem of compliance with the policy. Those unauthorized channels exist, they're easily accessible, and detecting breaches around this use of unauthorized channels is really difficult. Now, at the moment, it's fallen mostly to the eCommunications surveillance teams. And in many organizations, what they're looking to detect for is references to other channels. It could literally be WhatsApp, WeChat, or let's take it offline, and looking for people moving a conversation away from a recorded channel. This is incredibly time-consuming. It's a low-yielding strategy. I hear all sorts of expletives from surveillance teams all the time. But if you then add in BYODs and home working where you can't be overheard, the friction is so reduced in the access to these unapproved, unmonitored channels that this is a real control challenge. And it's worth noting that in the enforcement cases, although they weren't focused on either insider trading or conflict of interest, it was flagged by the US regulators in most cases that this is exactly the control framework that's been circumvented with these uses, and it is a focus. It's also worth noting a couple of organizations have found this in reverse. So you've had a regulator or an auditor in to look at potential unauthorized trading, so restricted trading, and what they found is unauthorized channel use. So these things jump up all over the place and bite. They are a problem. Because of that issue around the control, it's where we need to come back to talking about culture and conduct and ensuring that people are thinking about the ethics of their decision making. We've got cultures in organizations where people will do the right thing. To quote the FCA, it's a really simple strategy to roll out, and to just think about the fact that where you've got a controls limitation, you do need people making good choices.
Thank you, Emily. Now, Emily's mentioned the risks, the problems, and now we want to explore what are some of the possible solutions, or at least the tasks that we can implement right now to get us closer to that solution. So, Andy, given your responsibility for data privacy across APAC, how do you see this particular task over balancing the need, for example, on one hand, comprehensive communications surveillance with, on the other hand, employee privacy expectations, especially as Emily just mentioned, dealing with platforms like WhatsApp, WeChat, or platforms we've not covered today that are culturally and maybe some would say indispensably embedded in this region.
You see, all the best systems in the world, you cannot be able to prevent intent to fraud, right? But what you can do as an organization is really pay more focus on having the social media channels being formulated in the enterprise versions, because it's unavoidable in this time and era that you have communications outside of the official channels. But what you can do is bring them back in, use the enterprise versions, which will ensure that the data or the communication that is being spoken is being ring fenced in your environment, and you can actually use different AI tools to actually to analyze it rather than you have a team of surveillance people sitting around. I think those days are still around, but again, we need to improve in this time and era. So with that in place, at least you will be able to ascertain what is being communicated, what is being shared, and at the same time to inform your customers that anything beyond the official channels will be deemed not representative of the companies. And you can actually start to ring fence the organization from pervasive fraud patterns that's conducted by individuals. At your own, you could actually safeguard not just the data that has gone out, but you also allows yourselves to be responsive to the market trends. If you go to China and you tell people you only engage through emails and through the official channels, you're not going to get far in terms of business. People use WeChat to engage off and on channels. If you remove that, if you try to say and look for, let's say you have a Chinese client and you're trying to a deal, you need to do the voice recording and you're unable to reach him through the channels, you will need to use the WeChat to engage him, and that's probably a more responsive and timely usage. Again, times are different. We have to balance the need for privacy and also the need for customer focus. But this is also things that enabling the enterprise versions will have us centralizing data in order to use modern tools to go through it. So again, it's about digitalization. This is unavoidable if you are running a business in the modern times under license regimes.
That's correct. Now, while MNPI violations can result in severe regulatory consequences, remember the poll that we showed you earlier at the beginning of the webinar? That poll revealed that an even greater percentage of compliance professionals, that is 68.5% to be exact, struggle with the nuanced, judgment-intensive challenges of managing gifts, entertainment, and hospitality. And the holiday seasons that's approaching is certainly making things so much more challenging. So, on that point, Andy, can you tell us more about how to approach GEH policies more wisely?
If I were to sum it up, it would be really awareness and education, because all of us in the different FIs, we will have policies, we will have all the necessary setup. Now, it's a matter of getting the individuals to understand what is reportable. I think that's always been a challenge. And certainly itself, we need to send out reminders. We will need to engage the individuals in the front line to ascertain upfront what should be reportable. So this has to be done on, I would say, at least on an annual basis. This will allow the individuals to know what to report and what not to report. And after which, it's also very important that within the same firm that we have the stakeholders talking to each other, whether is it systems or whether is it through direct communication emails. Those things will need to be embedded, because you would have people going out for dinners with customers, right? You would have people trying to circumvent the thresholds that's been put in place by having the most junior person say putting in the claim expense, and after which the most senior person within that lunch will obviously approve it. Now, those things you can easily circumvent it by ensuring that having the most in any client engagement, it's always a business policy to have the most senior people to sign off. That will ensure when it goes down to the channels in terms of your HR, in terms of your finance team, all this protocol will be embedded. Now, because a lot of times I think what we have seen in the past is people are struggling or they are dependent on reports before they dig into the materials to be seen. So it's not, it's not sustainable, because you could have MDs who have lunches or dinners every now and then. And let me maybe just share an example that I've seen in the past. In this region, we do have a lot of big events. I mean, in the context of Hong Kong, we have the Rugby Sevens, we have in Singapore the F1s, and these are big events whereby FIs come together. And it's always crucial that we send reminders, we engage our teams, not to be untimely with all those reports. And this has been seen right in the past, whereby you get a lot of significant past thresholds. I mean, you probably get a ticket like F1. You could get a ticket with VIP access for about maybe 1,000, 1,500 US dollars equivalent. And those will be much across the thresholds that we will have. It's important to make sure that the visibility is there. You engage the team up front so that there are no surprises down the road. Again, it's a matter of ensuring awareness, ensuring the tools are on par for them to utilize. So it is not an easy task, I would say, to my peers in the market, but we are certainly trying to improve. We were certainly using different methodologies, and it comes back to the question of how big the activities that you have, and then you use the right approach. We have different means. I'm sure the market and the peers will have different views, but I'll stop for now. So maybe I can let Emily to pick it up, because I guess we have seen a lot of different approaches.
Emily?
Thanks, Andy. Yeah, thank you. I mean, and it's great listening to this. This is one of those bits of compliance where, although you sit in meetings and go, oh my God, you kind of laugh out loud sometimes at the stories you hear, the situations that are created. But we are running into Christmas. There's gift giving, there's entertainments. It's worth kind of flagging in everybody's mind. Entertainment and gift giving happens within employee groups, so internally as well as with clients externally. Those Kris Kringles that get organized in some locations, team drinks. And we've got to think about the processes being applied everywhere here. So if it's not already being communicated, now is the time. Town halls, reminders out. I would keep it super simple. As Andy said, there's a couple of headlines here you want people thinking about. What are the dollar limits? If there's an aggregation rule, what is it in simple terms? Is pre-clearance needed? And if you've got any never acceptable exclusions, those kinds of things like cash or cash equivalent gifts off the table. If there are embarrassing stories, I would really restrict how you use them as a warning, but there is an element within cultures of reminding people they have personal skin in the game, right? There's an element of both embarrassment, but also your own integrity and professional profile. And sometimes people don't have good judgment, whether it's the time of year or just they're sitting in a situation where they get it wrong. Reminding people that they can make decisions at this time of year that could be embarrassing for them, embarrassing for other people, as well as not compliant. People worry more about the embarrassment than the compliance. I do think the days of strippers arriving at client events and ostentatious gifts being delivered to trading floors and all manner of inappropriate shenanigans, I feel terribly old now, have probably passed, hopefully passed. But there are a couple of things we can ask people to do to just sense test that. And I think the one I like most is when people aren't sure about their judgment, remind them to think if that gift or that party or that thing they're looking to do, that event, if it became a news headline, would it impact the reputation of either the company, of them as the giver, or of the recipient of that gift or of that event? And I think if they can say no, it wouldn't affect anybody's reputation, probably, I mean, maybe phone a friend. But yeah, that's kind of the rule of thumb I would try to use so that we avoid some of those stories that we still chuckle about years after.
Thank you, Kellyanne. I think you make a great point about using embarrassment as an incentive not to stay compliant, right? So that could be as powerful as sometimes as reputation as well. So bring it all together, Kellyanne, how can technology support more consistently the oversight of all these risks and challenges that Andy and Emily just mentioned across teams and across regions? How can technology help us?
Yeah, great. So we've just talked about a whole scope of different areas of employee and firm conflicts of interest, like a whole lot. And so I might actually work backwards from the topic we just discussed, and then we'll work back up. Gifts and hospitality systems have been around for many years to automate this process. And it is very easy for employees to potentially forget that it does exist if there isn't that culture of reminding or enforcing pre-clearance of gifts and entertainment. So having the G&E system not really sitting, say, in an HR system, but actually embedded with your other areas of conflict of interest is really useful. The majority of my customers all require a pre-clearance of receiving or giving a gift or hospitality or charitable donation, for example. And there is generally a reprimand or some form of conduct issue if you don't, which is important to be able to manage in the system. But not only that, once you have pre-cleared a gift, whatever value that might be, you do want to automate some rules in that. Is it are people declaring gifts under $50? Great, let's automatically approve it. And what automating these systems, as well as personal account dealing, is actually give you an insight as to what the behavior is in your organization in totality versus manual-based systems where you're not catching everything. You're not seeing 100% of the population. And so often what I've seen is people's policies are actually way out of alignment with what's actually happening in reality. And so by automating a system like G&E, like personal account dealing, you start to see some trends. Actually, people are trading 10 times in a month, and we shouldn't have our policy as 5 in a month like we had because we weren't detecting that before because we weren't automating it. So implementing these systems and putting in the thresholds gives you insight into how you can update your policy long term. But then also our system in particular allows you for gifts to say, did you actually give that gift? Did you receive that gift? If so, how much was it? Again, let's check those rules. Did it breach policy after you gave the gift? What I like about G&H system and solutions like ours is that it's integrated with the areas we talked about earlier, like market sounding and MNPI management. So if you're managing your inside information, the third party you might be pulling into a piece of inside information like wall crossing, then you've got those same business entities that the inside information is about, the same G&E, the same outside business activity to identify potential firm-wide conflicts in the one system. And that's really what we're trying to do here is integrating all of that together. MNPI or market sounding pieces can be managed in a solution and create some automation, recording the wall crossings, the Chinese walls as we still often call them, who's got that confidential information? Where's it going? Did they accept, did they accept the consent to receive the market sounding, etc.? All of that can be recorded. And lastly, on the e-communications surveillance, I think what we've just heard from Emily in particular is that it's incredibly expensive. It's an expensive process to surveil, and, solutions that Andy mentioned, like WeChat and WhatsApp, are actually really expensive to obtain data from. And so having really clear policies, like what was mentioned around what sources you allow, what sources you don't allow. And then I think many firms have moved away from the BYOD policy back to giving out firm devices to try and mitigate this as well, to keep the sources intact. But you're right. There's a lot of conduct issues on the side of this, and being able to identify them and enforce them and teach people about them is going to be important. So I guess my summary is, whenever you implement a technology platform, it really has to be flexible and configurable to your organization's policies and procedures across the region or globally. Implementing a technology platform in this areas really allows you to go, hang on a second, we're doing things 10 different ways between Japan, Singapore, Hong Kong, Korea, Thailand, and Sydney. Perhaps there's a way that we can align our policies when we automate the solution. Maybe our G&H policies don't need to be so, crazily different across the region. This really is what we help firms do. I had one firm who implemented a fit and proper solution for managing their certifications and attestations and their onboarding of licensed individuals. And they were doing this manually previously, and every region had a different approach. By automating, they kind of standardized that, and it became easier to manage going forward. So that's kind of my summary on technology in this area.
Thank you so much, Kellyanne. Now, so far into
So,
this web,
Sarah, if I may chip in on what Kelly has mentioned, because I
course.
want to bring a little bit of a practical view from a industrial practitioner, because systems are great. Systems are there to support our needs in terms of compliance, in making sure the frameworks, that is the whole idea. But we cannot also forget about the practical side of things, whereby you will still need to have local understanding. Say, for instance, just now we were talking about the GH. You can have all the thresholds, the framework in place. So those can be set up in the system. But you will need to have people with experience, people with understanding of the industries to actually come in to say that, look, because there will be instances whereby, because you have smart people, right? The organization has smart people across the board. People know how to game the system. When you go to certain countries, that countries, the representatives are much more, should I say, mature. They will answer, they will report. Certain countries, they will try to fringe it or wink it downwards. And that's not because you do not have thresholds in place. It's just that people will utilize that to their benefit and to find the loophole around it. So I'm not asking our listeners or our participants to be detectives, but I'm asking them to keep in mind the system is here to support, but you will need to understand from the countries that you're representing the type of ethical levels and the moral standards that we have, because in certain cultures, it's okay to game the system and you can get away with it. But in the countries, I would say the stricter ones where there are very clear black and white rules, people tend to be much more on the ball. So those are the kind of a bit of the cultural understanding and also the local experience that will support the system engagement within the organization. I'll stop there. That's good.
Thank you. Well, actually, you brought up a very important point, practicality, how to ensure that those compliance frameworks are effective in practice, not just on paper, right? And earlier, Kellyanne mentioned consistencies across jurisdictions. So I like to turn to you, Emily. From what you've seen, regulators across markets take different approaches to enforcement. So how can firms design a compliance program that works consistently across jurisdictions?
Of course, yes. And we know that in the Asia Pacific region, we have a huge number of jurisdictions, and there's a fair amount of difference, everything from different languages, different regulators, different backgrounds. Rather than going through them all, because there's far too many for this conversation, we can look at the spectrum and just pick out a couple of key actors here to just show where that difference is. The MAS is very focused on collaboration. I'm sure everyone here has a sense that They're looking not only for innovation and openness, transparency, bringing them in, but they want to prevent problems early. They're not looking for things to escalate. If we then move elsewhere in the region and look at perhaps ASIC, where I'm sitting, or the SFC in Hong Kong, the enforcement approach, that idea of where you've got maybe a stick and a carrot on conduct, they've gone very much the stick, demonstrating, as Andy said, that some of these jurisdictions respond better where you've got public consequences of rule breaking. And certainly SFC, in its number of enforcements over the last couple of years, has used exactly that, very public enforcement. ASIC's taking a slightly different strategy. They're taking a commercial angle on it. What they're looking to do is make that enforcement so commercially impactful that it's no longer viable as a cost of doing business to have these enforcements, and they've said that. So slightly different ways of using enforcement to get to a different outcome. So where does this leave firms? And as Kellyanne said, you want as much as possible to have coherence, simplicity, consistency. And if we look at those differences I've mentioned, they're really in the interpretation of the outcomes. There is not that much difference fundamentally in what these regulators expect in terms of the standards that people are to adhere to, what a conflict of interest is, and what the right thing to do would be. So we're not really being asked to choose between jurisdictions that are massively different. It's interesting that we've still got examples out there in the market of country by country strategies that look completely different and don't join up. What a program has to do is build to the lead regulator and the highest standard you operate in, take that as a single framework, and then have the flexibility to be able to be applied locally. And I think, as Andy mentioned, allowing for those cultural nuances, we have local compliance officers who can message differently. So if we think about a Singapore-based employee, emphasizing that self-reporting is going to land. That's the kind of code of conduct that we would expect Singaporean employees to be used to. But when you're talking to maybe someone in Australia, you might be wanting them to be able to document and defend their decision-making, because if anybody comes knocking, that's what they're going to have to do. And you just think about how the personal liability sits in that local culture. It doesn't mean it's a separate program.
Thank you so much, Emily. Now, Kellyanne, we've talked about frameworks. We've talked about collaboration. Can technology bring us one step further?
Yeah, so I think I touched on this a little bit before, getting ahead of myself, but I think the benefit of implementing technology in this space is absolutely it's assisting with record keeping, firstly, an audit trail that is required by all of these different regulators across the region, where they're coming in for supervisory examinations and so forth. In addition, as I mentioned earlier, the benefit becomes around obtaining 100% of the population in an automated way instead of audits, compliance audits, where you're only looking at sample-based testing for particular areas as well. So really letting automation do the work for you. I already talked a little bit around what Emily reiterated as well, around the different policies and procedures across jurisdictions. One massive area that I really do like to see is when firms take multiple, technology modules in our platform. So they're purchasing not just personal account dealing, but gifts and entertainment, outside interest, close personal relationships, and deals, or MNPI. Because then you start to identify potential conflicts across all of these areas. Mary Jane in my organization, she has an external relationship with this politically exposed person from ASIC. Is that a potential concern for my organization? Or Bob, so Australian of me saying, Bob has a relationship with this vendor that we're potentially doing an M&A transaction with, etc. So utilizing a system to ensure that you've a centralized system for all of these areas of employee conflicts of interest can help you with your firm-based or even third-party risk management areas as well. And so that's where I see the benefit coming in. And if you're a smaller firm, it generally starts really small with one area that is a huge pain point for you that you want to address now. And then you start to expand. You're like, hang on a second, I also need a communications surveillance tool because we're starting to let our wealth managers use WhatsApp, or these kinds of scenarios allow you to expand for technology across regions. So those are my final points on that.
Thank you. Thank you, Kellyanne. And thank you for all the insights that Andy, Emily shared earlier. So the audience is asking our panelists, do you have any comments regarding non-fraternizing policies or specifics regarding relationships in COL policies and balancing with jurisdiction's common position and privacy considerations.
Yeah, so I think I see the question is like regarding non-fraternizing. So I assume that's
Yes.
around connected persons and relationships, whether that's financial or like personal relationships within an organization. And then privacy considerations with that. So, how do you ensure that people do declare that they have a potential COI with a manager or an associate in another department, etc.? Our solution caters for close personal relationships, which could be utilized for financial relationships or personal relationships, and different firms implement it in different ways. Some firms are only interested in internal relationships, some are only interested in external relationships that they're declaring.
I'll just chip in. I mean, the trend is obviously going not to be an encouragement of such personal relationships within the firm, but there is no outright saying that you cannot have, right? Now, that is, we as firms, as industrial practitioners, we try not to step into the individuals as long as there's no conflict and there's no interference with the organization. Now, how do we quantify it? I think that's a very difficult position, which is why there's a lot of emphasis, I would say, with firms out there, in terms of their code of conduct, their expectations, that's all listed there. So that is much more of the governance that we try or we will see that's been implemented commonly.
And I think we've already heard that word culture jump back in because it is just so critical here. When we look at each of these cases, and some of them are case by case because relationships between humans are a little bit complicated, but it comes back to that doing the right thing. What is the culture of the organization and how can it be accommodated in a way that's consistent with our regulations and risk management?
Emily,
Thank
you
you
got it
so
spot on
much.
because in every firm that I go, the message that I send out to the rest of my team and also to the rest of my colleagues is do the right thing. When in doubt, question, ask, do the right thing. And if you're not familiar with it, just reach out to your compliance officer, just ask them, check in with them. At least you have, step up forward. If there's any doubt in terms of down the road, there's investigation, there's some sort of conflict that needs you to be involved, at least your behavior will have shown that your intent wasn't on this part. You are well intended to make sure that you are clean and honors above your behavior, ethical behavior. So those things do matter for the industrial practitioners here. I think it's the small things that comes into value when we run a deep dive investigation. So the good old fashioned traditional stuff still remains. I'll have to say that.
Thank you. And we actually have 1 or 2 minutes left for one more question. And here's another audience question addressing for all panelists today. It says, what kind of compliance testing program do you consider effective?
I think I'd love to know a little bit more about compliance testing because what I have found is that every organization you go into, there is a slightly different scoping of what surveillance testing is, assurance testing, how much it overlaps with the internal audit structure. So I think the reality is what it needs to do is not duplicate. And what you want to be doing is using those compliance officers who know compliance risk differently than maybe internal audit or assurance teams to leverage that expertise so that when they have a finding, it's huge value add to the team that they find it in because you can then remediate. And that would be how I would be using that resource.
I would say, let me chip in on that. You will find me to be the most practical person because we can't control the entire world. We can only control the environment that we're in. We all have budgets. We don't have a free reign. I hope my CEO can give me free reign of budgets, but that doesn't happen in a realistic world. So what needs to happen is, given the type of business that you're involved, where are the variables? Where are the communication happening? Do you have the baseline frameworks in place? After which, the communication that goes in and out of the firm, are those, I'm not saying that those should be surveyed at this moment, but are those being tracked? Do you have the tools that's been enabled to your team itself who is engaging with your clients, with the team? Those are the areas that help you to serve your obligations. And those are the areas that you will need to pay a little bit more attention on. Because from a baseline perspective, if you are licensed in a certain jurisdiction, you know your obligations there, and you need to keep your environment clean and sane. Then you need the tools to ensure those are being done. Whether is it complete clean, you obviously will do it on a post event basis kind of monitoring, but at least you still got the basic setup.
And I like our panelists to conclude this webinar by doing a quick fire round. What's your biggest takeaway that you would like our audience today to bring with them? One sentence.
I think that people focus too much on the process, the documents, and the policies, and I would be really looking through a culture lens.
I will look at continuous education, awareness creation, and increase digitalization of the processes.
And for me, I'm a big fan of culture as well. And how can you help to facilitate that by making the process for all of these policies to be easier to follow? Hence, I'm a big fan of technology and just not letting this die on a piece of paper or a PDF that never gets used.
On that note, thank you so much, Kellyanne, Emily, and Andy, for joining us today for this very, very insightful discussion. And thank you all for joining us today. Wherever you are, have a good day.